you have a good broker too, where you throw a deal by him that's not his listing and say, hey, what are your thoughts on this? Because, it takes him 5, 10, 15 minutes to give it a quick run through. You know what? Hey, this is a good deal. Hey, this isn't. Here are my reasons.
Welcome. This is the Hot Real Estate Investing Podcast, a podcast dedicated to helping others through real estate investing. Our hosts interview guests from all aspects of real estate investing who generously share valuable experiences and advice. Whether you're starting out or an experienced investor, this is the show for you.
Hello and how's it going? My name is Travis Shelton and welcome to the Hot Real Estate Investing Podcast, where I interview guests who want to help others investing in real estate. We keep these podcasts fun and full of value, and looking forward to a great conversation today with two Phoenix multifamily brokers. Anton Laakso and Brian Tranetzki are multifamily brokers in the Phoenix metro area and principals of Commonwealth Real Estate Advisors with over $1 billion of transactions under their belt. Brian and Anton, thanks for joining me today.
Yeah, you bet. Thank you.
Thank you.
Absolutely. Well, for our audience, can you guys give our audience just a little bit more about yourselves and maybe your real estate focus at Commonwealth? Maybe we'll start with Brian, just a little bit more about yourself.
Yeah, so I've been in the business for close to 12 years. I come from an investment banking background, started my career over at Marcus & Millichap, and then went on our own and started Commonwealth and just focus on multifamily acquisitions and dispositions for the Phoenix metro area. We just really work in private capital, multifamily space.
Wonderful. And what about you, Anton?
I grew up back east in Northern Virginia, came out to Arizona to go to Arizona State, to go to ASU, started my real estate career 2015, started in residential actually, got tired of that, wanted to have a little bit more fun, so got into the multifamily brokerage side. So when Brian and I started Commonwealth, exactly like he said, with the focus on private capital, multifamily apartments, and mobile home parks, that's really our specialty.
Okay, very nice. Anything else you guys would like to share about Commonwealth? Like what's your focus? I know it's kind of a newer maybe company. So anything, specific that you guys want to share about your company?
It is. We're growing. We've got other agents that work for us, and we are really specialists. And so we just focus on multifamily. We don't do anything else. We don't do leasing. We don't do single family. We don't do commercial from a standpoint of office or industrial. We really refer that out, and we're just hyper focused on the multifamily market for the Phoenix metro area in Tucson. And so we come with a lot of knowledge in that space, and we're able to service our clients at a very high level.
So we always start our shows with some motivation. So Anton, you want to start us off and share your motivational quote?
Something my hockey coach always said growing up: hard work beats talent when talent doesn't work.
Very nice. And what about you, Brian?
Goes to my all-time favorite athlete, Michael Jordan. Some people want it to happen. Some people wish it to happen. Some people make it happen.
Love it. So it seems like kind of a common theme. It's like you got to work hard to be able to actually do something in this world, right?
Roll up your sleeves, get in the ditches, and start working hard. Yeah.
Exactly. Love it. Yeah. Real estate's supposed to be easy, right? Like this is just passive. You don't really have to do anything in this world, right?
Passive income. That's right.
Yeah. It's just that easy. Well, thanks for sharing those. Yeah. Thanks for sharing those quotes. And so transitioning into our main topic, how can you help our audience of real estate investors as multifamily brokers? I really, excited to hear from your perspectives today. And, we talked a little bit before we started recording of maybe starting off with what's the best way for a newer investor to establish a really good relationship with a broker. And maybe we'll start with maybe Anton. What mistakes did I make when I started reaching out to you and we started trying to work together on a project? What could I have done better?
No, this is perfect. So, exactly like you did, call, text, and email. I know we do get busy sometimes, but call, text, and email, inquire on a deal, tour the building, meet for coffee, meet for lunch, get yourself in front of the broker so you can put a face to the name and vice versa. That way, you can look at that deal. He can shoot you straight on that one. Or maybe he has something else in the pipeline that might be a better fit, or it's, hey, Travis, let's look at folder B instead of folder A. I think this one's going to be a better fit. But really just staying present and just staying in contact.
For sure. And I guess, for someone that's newer that maybe hasn't done as many deals, right? How can you establish yourself as a true, not tire kicker, right? And maybe someone that will actually close, in this market, it's changed a little bit. 2 years ago, honestly, guys, I would never get a call back from a broker. Now markets changed a little bit, and it's like everyone's willing to kind of give us newbies a phone call back. But, as the market changes to maybe a hotter market, how can newer investors continue to gain your guys' attention, I guess?
Just having their ducks in a row, I would say, making sure that you've got everything established. And then you could rely on the broker's help for that, right? Like make sure you have a lender in place. Have you been pre-qualified for a loan? Have they looked at the property, as your lender looked at the asset? Do you have a property management company in place that you're going to leverage? Do you have an insurance guy in place that you're going to leverage? All of those things, just to make sure, like when you're talking to a broker, that, hey, I'm ready to buy this deal. I've got everything in place. I can rely on these other vendors to qualify the deal with me. And then when I finally submit an offer, we know that we've gone through the due diligence process up front, and everything's really, in a row for you.
Okay. No, that makes a ton of sense, and really good advice, I think, for any of our listeners out there. And so, when we're talking to brokers, what sort of questions, and maybe we'll start on the buyer side. What sort of questions should buyers be asking the brokers? Just in general, up front when they're evaluating a deal, maybe on that first phone call when they're kind of trying to inquire about a new property.
I think both of these questions kind of tie into each other because when you're talking to a broker, when you're calling in on a listing, you want to ask for the rent roll, the financials, the OM, but you want to ask about the deal specifics. What's the seller's motivation for selling? Why is he getting rid of the deal? Usually there's the 4 Ps for the reason somebody wants to sell: profit, price / exchange opportunity, partnership disputes, or personal reasons. So honing in on the reasoning that they want to sell, that's going to help you negotiate to the best of your ability, but then also asking about location specifics, developments nearby, different drivers nearby, job growth, wage growth, new deliveries, etc. All of that's just going to help kind of show the broker too that you know what you're talking about as well. And then going to tour buildings, that's pretty much your best bet.
Okay.
Yeah.
Anything to add, Brian?
Yeah, I would add on that. I mean, that's a great synopsis of it, and understanding the deal story, right? Looking at, is it a value add opportunity? Is it a renovated turnkey asset? What did the history of the deal look like? When you look at the trailing 12 income and expense statement, are there holes in it from the income standpoint? Are those a derivative of vacancy factors because of renovations? And then having an understanding of how you're underwriting the deal. Hey, Mr. Broker, how did you guys underwrite this deal so I can underwrite it the way that I underwrite it, and also get an understanding of how you guys underwrote it? Are you taking the rent roll and annualizing it? Are you looking at the T30 income, T60 income? How's the lender going to look at it? Are they going to underwrite it the same way the broker's underwriting it? So having a really solid understanding of the deal story, the history of the deal, and how it's underwritten today.
That is something that I actually personally struggle with a lot, right? When I get a T12, when I get a rent roll, the story is always different than the pro forma, or the OM is always different. My underwriting is different from the broker underwriting, which is different than the lender underwriting. So help us out. Like, what's the best way? And like, what are, I guess, ultimately you need to get these things financed 9 times out of 10, right? So what are you guys typically seeing from the lender's perspective of how they're underwriting, or any kind of I guess common numbers they're using, like, vacancy rates or kind of norms?
Right. I mean, if it's it just depends on the deal. It's the deal story. And so we've got, as brokers, one of our jobs is to be very in tune with the lender market and understand who's lending in the market and how these lenders are analyzing deals and underwrite it in the same way that the lender is. Because if you can't get financing, the deal's not going to work one way or the other. So you really got to underwrite to the lender standards. And you take like a renovated deal, for instance, and they just finished renovations, and so it had high vacancy throughout the year, but now it's stabilized. A lender will typically take trailing 30-day income or your rent roll annualized and utilize that for your EGI on the asset. And so that the lender's going to use that They understand the deal story. The buyer understands the deal story. And really, from a broker standpoint, you just want to hop on the phone with your broker and have that conversation with them. Hey, how are you guys doing this? How did you come up with your pro forma? And then how can you defend your pro forma, right? And so we can refer management companies out and say, hey, here's our underwriting for our expenses. Feel free to talk to a management company. And they can really solidify the fact that they can manage it for this. And so you have a third party coming in and saying, yeah, this is something that we can achieve for you.
Mm-hmm. No, it makes sense. And I love that, the story, right? I've heard that multiple times, you guys say, and it's kind of like the story that you have to create for the lenders, and I think also for the broker, and sometimes even for the seller, right? What's something, what's the asset going to become, might become important. So what are, you guys have said some of the good things, right, to maybe establish these relationships. What are some things or red flags that you guys see from, the tire kickers or the people? What are the things we shouldn't do when we're contacting you all? Should we not text you every day? Should we not call you every day? What are some of the bad things you see out there that we can advise us not to do?
See, I'm fine with the texting and calling every day. I'm not married, no kids. I'm good with that. So no issues there. I would say more so, assuming what you read in a book is just the be all end all. You should hear the broker out. At the very least, you're going to come back with market data versus being that guy that says, you know what, the expense ratio isn't 40% like I read in this book from 15 years ago. It's like, well, expense ratios have changed because rents have risen so much. So it's hard to put a percentage to it. So just hear your broker out, I would say, at the end of the day.
I like that.
Yeah.
Brian, anything to add?
Yeah, I would say just have an understanding of what it takes, right? I mean, if you're coming into the market and you think you can put 20% down on a deal right now, I mean, that's just not going to fly with the lenders. I mean, we're in a 40, 50% marketplace right now on leverage, loan to value. And so being a buyer, having that understanding is very important when you're talking to your broker, because you're going to disqualify yourself right out of the gate if I only buy things with selective seller carries, or I've got 20% to put down. I haven't really spoken to a lender yet, but I want to put an offer in on this deal. We're like, oh,
yeah.
We're
a little bit far apart.
We're pretty far apart. Right. Yeah.
No, that makes total sense. Yeah. I think it's, and I think I love that point by Anton. It's like, you read all these books and there's so many resources out there. And if you listen to a podcast 2 years ago, it's different than the current market today. So I think just touching base with brokers and really knowing what is the current market conditions. And I know we're going to talk a little bit in a few minutes about the current market conditions, but maybe before we get there, like if we're making offers, right, how do I make my LOI most attractive to, I guess, the broker and the seller in today's market?
I would say work with the broker on language, because the way that you word things just sounds a lot better on the initial offer. So you can do, I would say, a shorter DD always looks better. In the Phoenix market, we're seeing not very much financing contingencies, if any. It's coming up here and there more so now. But that being said, if you can avoid it, great. What Brian said, talk to the lender beforehand. But, I'd say an average 2% deposit that's either non-refundable after inspections, or if you're that confident in the deal, releasing the deposit. It shows that you have skin in the game, that you're serious. And then really you can buy yourself time. I know a lot of buyers get worried about time, but most sellers, it's very few deals have we come across a seller where in the initial offer or the offer that goes to PSA, where they don't agree to a 15 or a 30-day extension with an additional X deposit.
Sure.
So doing creative things like that to buy yourself time to, in case third-party reports take a little bit longer, you're buying yourself time, but you're getting the seller, showing him skin in the game, quicker DD, earnest deposit that's reasonable, either released or non-refundable after inspections, et cetera. So I would say those are pretty much what we would advise our clients to do.
Okay, very nice. Anything to add to that, Brian?
Yeah, just rely on the broker knows the seller. He knows the seller's hot buttons and what really motivates the seller. And so, there's oftentimes you can get some alleviation in price if your terms are very strong. Coming in, like Anton mentioned, with the shorter due diligence, no financing contingency, having understanding that you can get the debt, things like that, and then you can be more aggressive on pricing. And that's just having a conversation with the broker and having an understanding of what the seller really wants.
Now, for some people that maybe aren't as familiar with multifamily and maybe like more, coming from the single family realm where you have a buyer broker and then a seller broker, are a lot of your investors coming in with another broker, like a buyer broker that are trying to make offers on the deals that you are listing? Or help me with kind of the generalization there. And is it beneficial for an investor if, we can all, except for really the off market, a lot of people can use Crexy, LoopNet or whatever, to find at least a deal out there. Should they be contacting you guys directly? Is that beneficial, or is it more beneficial? Like if I see a listing that you guys don't use, to come use you all to go represent me on a buying a multifamily property?
Right. I mean, we prefer to work directly with the client, with the buyer, because it's telephone game when you're not, right? And so really having that understanding when you're talking to the buyer, and we can go to the seller and say, we're talking directly to the buyer. You can tone of voice, the cadence of the conversation. You can really, once you have a qualified buyer, you can really pitch that buyer to your seller and say, look, this is the right buyer for us. Maybe he's not at our price, but I think he's the right buyer, and so we should meet him in price. And so it gives you're giving your broker the leverage to really put that deal together and bridge the gap if there's a gap in pricing. And so, we work with a lot of clients that want to have us work their deals for them and underwrite them for them and represent them. And so it's just a relationship business. And so we have a lot of clients that rely on us to represent them as buyers. But most often we're working directly with the client themselves.
Okay. No, that helps a lot. I think it's always, I've struggled myself when I go to make offers. I'm like, would it be better me doing this myself, or would it be better me having some different representation and having that, from the buyer standpoint, having that little bit of telephone. So I do get a little bit away from negotiating with such great experts at negotiating, I'm sure.
Right.
So yeah, I think it's plus or minus, but I prefer personally to work directly with the brokers myself and talk to y'all versus having someone else and having to play that telephone. Cause as much as I trust agents and brokers, I trust myself a lot more. Right.
Yeah, exactly. And then you're tuned in and you know exactly what's going on. And so you're really in the know.
Yeah.
Exactly.
And to add on that too, the broker is that's working directly with the seller. He's going to know, like Brian mentioned, like the hot buttons, what his motivation is, how to get in front of him the best way. So, also, you have a good broker too, where you throw a deal by him that's not his listing and say, hey, what are your thoughts on this? Because, it takes him 5, 10, 15 minutes to give it a quick run through. Hey, this is a good deal. True. Hey, this isn't. Here are my reasons. So yeah.
No, that's super helpful. And I can say working with you, Anton, primarily, I felt very supported. It was really nice. The resources, right? I think a lot of times you're leveraging the expertise, but also it was really nice that it was the resources to, hey, here's a great contractor. Here's someone has done draws. Here's someone that's, you can call and get another quote. Here's someone that can help with financing. It was almost like everything was taken care of by identifying and having a great broker like yourself, to be able to assist in a deal closing or a deal progression, at least in our example. So maybe let's transition to just, Arizona and Phoenix multifamily market in general. We all know how hot how crazy the market was about a year ago, but talk to me today. It's Q4 2023. Like, what is the current market? Is it still a seller's market in the commercial multifamily world, or kind of where are we at?
Yeah, the market has shifted, obviously, pretty drastically. In 2021, it was a very hot market. In 2022, it started to cool. In 2023, it's still cooling. Velocity right now is down 31% year over year. From 21 to 22, velocity decreased by 31%. From period over period, if you look at January through October of last year and January through October this year, we're down nearly 70% in velocity from transactions. Wow. There's only been 49 transactions to date, where last year there were 267 transactions to date. And that's in the private capital space. And so, moving forward, I think we're going to see it continue like this through the remainder of the year. But next year, hopefully we see interest rates trickle down some. And then there are still buyers out in the marketplace looking. Yep. It's just much more difficult to put deals together. I mean, we're talking to buyers every day, and there's still 1031 exchanges happening. There's still migration of capital happening, especially from California into Phoenix. Mm-hmm. But pricing's down by 11% from last year. And so deals are to be had in the marketplace right now.
Yeah, I mean, I personally think it's a great time to buy because I am kind of expecting, interest rates to potentially decrease a little bit next year. We always know those presidential election years, they tend to decrease. And, it's like I'm still looking for, everybody keeps thinking there's going to be, this red ocean, or all of a sudden these great deals are going to pop out of nowhere. But who is buying the deals right now? Because as a newer investor, in the multifamily space, it's challenging still because of the financing to get these deals. So are you guys, the buyers out there, are they just all really experienced multifamily brokers or buyers? Or are you seeing newer investors come into the market?
It's very deal specific. So you'll find guys that are experienced, that have their contacts, that can go to whatever bank, get whatever loan. Then you have newer guys, and it's really about the fundamentals of the deal, the location. I know we keep saying the story, but it does play a huge factor, because if you're, out in certain areas of the Phoenix MSA compared to other areas, it's a different story that you're telling the lender. So it's very deal specific, and buyers are able to enter the market, obtain financing if there's a real seller at the table at a real price. And then again, it goes back to, leveraging the broker's relationships with lenders, with management companies, insurance agents. I mean, insurance brokers in general, insurance is up 30-35%. Yeah. So just kind of knowing all these ins and outs, being able to, talk to that lender with your own underwriting assumptions, the brokers, your exit strategy, et cetera, paint the picture. That's how you're going to be able to enter the market with both brokers, lenders, management companies, pretty much anybody in the real estate business as a whole.
Okay. So let me ask you, when we're telling this story, right? And I think Brian mentioned just having all your ducks in a row, is there a template? Is there a best practice? Is there somewhere an investor can go and say, hey, here's an example summary best practice of telling a great story that I can rewrite in my own words, and getting my MBA or whatever, right? You got business plans and all this, but I've never seen that in the multifamily. I've seen kind of the who, what, why, where. I've seen lenders want us to fill out, but is there kind of a best practice for that story out there? Or is it just making sure you're as well established in all those areas as possible?
It goes to the seller, right? So if it's a guy that's owned since 2014, 2015, similar to the deal, Travis, that you and I were looking at, a guy that's owned around that time, that hasn't really done much, has a one-off manager, hasn't pushed rents. There's still a lot of value add upside.
Yeah. Your
story at that point is exactly that. He hasn't really done much. Here are the historical financials for the last 3 years to show that. Here are the current rent comps for renovated product. This is what I'm going to bring it to. And that's kind of the story that you're painting. And then on the stabilized side, similar, hey, this is a real 6 cap. This is a real 6.5 cap in place. I can increase rents another half a point, basically just by marking to market or loss to lease, if you will. And that's the story on a deal like that. So it's just kind of knowing the asset and painting that picture.
Okay.
And relying on the offering package. The good broker is going to put together a good offering package, and you can read through that and really get the background of the deal and, hey, what's been done at the property, if they've renovated it, to what level did they renovate it, and really utilizing that to formulate your own kind of business plan, if you would, for purchasing the property.
Sure. Are there brokers that, and maybe this is a wrong question, but that we should stay away from, right? We all know there's those brokers. I go and I start looking at the OM or their pro formas, and it's always inflated, and it's grossly inflated, right? And it's just it's lipstick on a pig. And it's every deal that they come out with, it's I've had other brokers tell me like, you don't want to work with that guy. I mean, is that real out there? Are there people out there we should avoid because some of their deals are just, they're trash?
I would say if they're not specialists, if they're weekend warriors, definitely avoid them. I mean,
Okay.
you see a lot of realtors try to get into the commercial space and have a relative, an aunt, an uncle, something like that, where they list a property and it's worth $6-7 million, and you look at the underwriting, you're like, this just doesn't even make sense.
Yeah.
Yeah.
Exactly.
So I mean, the market really is driven by, I would say, five teams here that do the majority of the business in town, and you're pretty safe with utilizing that information to underwrite your deals. I would just be careful if they're not a specialist, if they don't focus in the multifamily space, if that's not all they do.
Okay. No, that's super helpful.
Yeah.
All right. So let's talk about, let's say next year, right? Let's just say 2024. Like, what are you guys projecting for the Phoenix metro area? Are you guys going to expect a buying frenzy as soon as, if interest rates go down? Is that kind of what you guys are expecting on tap? Or tell me a little bit more about, I know you guys don't have a crystal ball. If you do, let me see it sometime. But what are you guys thinking for 2024?
If we had a crystal ball, we'd be on the other side of the phone calls. But let's say, obviously, rates have stabilized to a certain extent, probably projecting further increases a couple more times going into next year. Ideally, it stabilizes and stays stagnant. That being said, it's catching a falling knife, right? So you're going to pay a lower price with a higher rate, or wait until rates drop and then prices go right back up. So you're getting a lower rate at a higher price. So yeah, it's kind of a balancing act at that point. And then on top of that, right now, if you look at CoStar or any article about the Phoenix Metro in general, it'll show that 2.6% negative rent growth at the moment. But we went 27 and 31% in 2020, 2021, 2022 going on. So we're still 8% higher than pre-pandemic levels. So if you're looking at a 5 to 7% year-over-year rent growth, we're still exceeding that. So still overall a good market. I think rents kind of stagnate as well. Cap rates stabilize as well. But that's kind of what I forecast for 2024. And then 2025, probably getting more towards the 2019, 2018 market, if you will.
Okay. You buy real estate and wait, right? Like you can't want both, right? Interest rates really low in a seller's market. It's like, it just doesn't happen, right? And that's
hard to time the market. Yeah.
Yeah. You can't time the market. So
yeah,
I love that perspective too. I've never heard that catch a falling knife, but I like that one, Anton. So what, Brian, anything to add to that?
I would echo that sentiment. I mean, I think we'll come into next year and we'll see some alleviation in interest rates. As soon as rates come down, there's definitely going to be, I don't know if I'd call it a frenzy, but definitely going to be an impact in the buyer sentiment in the marketplace. We're going to see that pick up. The deals that are getting done right now are deals that have come down in price and make sense from an interest rate standpoint. And as soon as you see interest rates lower, then that's going to bring other people into the marketplace. But yeah, I really like, to echo Anton's sentiment. I mean, it's either you're buying a deal at a higher price at a lower rate, or a higher rate at a lower price. I mean, it's like 6 in one hand, half a dozen in the other almost. So if you've got capital to place, I think now's a good time to look.
Yeah, no, I absolutely agree. I guess, ultimately, what we were all hearing at the beginning of this year, maybe end of last year at this time, was all these multifamily loans are going to come up, and the interest rates have jumped, several points, and people are going to be, giving away these multifamily or faulting on these. Are you guys seeing any of that in this market? Or are people able to retrade it or just refinance or kind of put short-term debt on it to withstand maybe some of that push? Because I haven't seen it out there, but you guys see a lot more deals than me.
Mm-hmm. I was going to say my cell number is in the comments or in the section below. Feel free to call me if you're distressed. I'm a buyer. We haven't really seen a whole lot of, blood in the streets, if you will.
Yeah.
We've seen banks extending with larger groups, extending loan terms because it doesn't make sense for them or the seller. they have relationships, so they'll extend it. We've seen price reductions. We've seen sellers become more realistic and understand that interest rates do in fact affect cap rates and pricing.
Yeah.
um, but other than that, I mean, at this point, not so much yet. I mean, we'll just have to see what the future has to hold.
No, for sure. Especially in Phoenix, right? It's such a great market. Like it's like maybe in some other markets, but in this market, I just don't see it. Well, guys, I've asked all the questions I have, but is anything I missed or anything specific about Commonwealth that you want to share with the audience? This is your time. Anything you guys want to add?
I think we're here to help. I mean, we're here if you've got, we can underwrite deals for you. We can look at deals for you. If you've got a deal that you're looking at, we can look at that and give you our analysis on it and run comps, look at the market segment and just help you out from a standpoint of whether you're a buyer, seller, new to the marketplace, not new to the marketplace. If you're sophisticated, we're here to be able to service all those needs. And like I mentioned before, this is all we do is multifamily. And so we're in touch with all of the buyers and sellers in the marketplace. And so we really have our finger on the pulse of the marketplace. And so it really helps working with a broker like ourselves when you're new to the market or sophisticated investor coming to the marketplace. I mean, you can certainly leverage our expertise and deal flow, and we've got access to off market, we've got access to on market inventory that we have, and so it's certainly a benefit to work with somebody like us.
Wonderful.
Yeah. To echo that, I mean, really just here to be a resource. Happy to, like Brian said, underwrite deals that you're looking at, whether it's ours, somebody else's, in our market, in somebody else's market, or throughout the country. Also on the sales side, hey, what's going on with my neighbors? Happy to do evaluation, show you what your competition is getting in rents, what you could do to increase the value of your property overall. Because at the end of the day, I mean, it's not a one and done phone call game. We're here for the long run. So years down the line, just again, happy to be a resource.
What is up, Hot REI Nation? My name is Jordan Nadella with Simplicity Lending Group and powered by Nexa Mortgage. As the nation's largest broker, Nexa Mortgage offers a variety of creative and competitive loan options through our 170 plus partnerships to help you achieve homeownership with the speed and service that you deserve. Whether you are a first-time homebuyer or an experienced investor, I'm dedicated to finding the right program to fit your financial goal. My mission is to make home ownership a very easy and seamless process from start to finish. If you are in the market today to purchase real estate, please contact me to find the best mortgage solution for your needs.
Awesome. And you guys wouldn't be on this podcast if you weren't great resources. So I really appreciate it and highly recommend, these guys. If you guys are in the Phoenix area or really anywhere in Arizona, they have deals in Tucson, they have deals up north. So if you guys are looking for a great multifamily broker, please reach out to Brian and Anton. We'll include all their information in the show notes. But it's time for the hot seat. Are you guys ready for it?
I'm ready for it. Let's go.
All right. We ask all our guests the same final 4 hot questions, and today we get to hear answers from both of y'all. So maybe we'll start with Brian and ask, what is one book you'd recommend to someone wanting to know more about real estate investing?
I would say my go-to book is what every investor needs to know about cash flow. It's a book that really dives deep into underwriting properties and internal rates of return, modified internal rates of return. How do you get to a hurdle rate, things like that. I mean, that's a must for an investor, especially if you're raising money on a syndicate level.
Wonderful. Awesome. What about you, Anton?
A book that really helped me in the multifamily space, Multifamily Millions by David Lindahl. Just a very beginner level breakdown of cap rates, cash on cash returns, securing debt, things of that nature. So entry level, but also a very good starting point.
No, wonderful. And you can start this question off first, Anton. What is your favorite productivity tip, trick, tool, maybe a time saver or an app that lets you get more done than the common person?
Personally, don't think, just do. Get the tough phone calls out of the way right when you wake up. Brush your teeth, phone call, the hardest one of the day. Just not
frog. Yeah.
Don't think, just do. If you overthink, you tend to get in a place of hesitancy. You start to second guess yourself. So it goes for all of life, really, your daily tasks or investing. I mean, obviously you have to think about your investments, but if you overthink it to a level, you're going to lose out on a deal because there's going to be 3 other buyers that are going to, get right ahead of you.
Absolutely. And Brian?
I'd say plan your day the night before and work off your list. I mean, I do a top 5 list every night before and what I need to tackle that day and just do one by one, and get through them and write things down. I mean, what's the shortest pencil is longer than the longest mind, so write things down and, just key on follow up and things like that.
It's so amazing how many people, it's just a simple list. I do too. I have my Power 5. I literally every day I write it down before I go to bed. I think, what am I got to do tomorrow? And there's always stuff that happens, right? But if you have that focus or you lose focus for a second, you got that list to look right back and get you focused again. So really great recommendations, guys. So what's your biggest real estate mistake or failure, Brian? And what did you learn from that experience?
Mine would be, we had a deal tied up off of Thomas Road, and I think it was 10th Avenue for like $145,000 a unit in 2021. And the buyer was new. He's a syndicator, and he put together the funds to take the deal down. And then 3 of his investors backed out last minute. And it was a significant portion of the equity that he needed to close the deal. And so ended up not being able to close it. That was a big, as a broker, normally we don't get involved on that side of it, but I was helping them try to source funds for it and raise money and do anything we could to help this guy out, and just wasn't able to happen. So that was I still drive by that deal today and cry.
I'd say about 3 times that now.
Yeah, no kidding, right? Yeah, exactly.
Anton, what about yourself?
I would say, on a cliche standpoint, just not thinking big enough sooner, starting from the residential side of things, going into multifamily. Just should have done that sooner. And then also, like Brian said, vetting clients and understanding when and when not to trust mobile home park managers. Had an interesting one where there was some prepaid rents up front, all cash. That was the manager who was in cahoots with the owner. It was a whole mess that had to get worked out. And now learn the signs from that one.
I'm sure you guys have seen some shady stuff out there and some mom and pop, pieces of paper, and things like that.
Yeah.
All right. And finally, guys, if you could be remembered for one thing, what would it be? Anton, we'll start with you.
Hard work and integrity. We'll answer your call, get back to you at any time. If I don't answer, you will be, I'll get back to you as soon as possible. And then integrity, I'll shoot you straight from the get-go. Multiple deals, Brian has done the same as well. But, comparing and contrasting, a buyer has given us, hey, here's a building of yours that I'm looking at. Here's somebody else's. And there's been a couple of times where we've had to say, hey, you know what? Numbers are the numbers. That other deal is better than ours. So go ahead, go with that one. So those are my
interesting. Yeah, love it. Brian?
Yeah, I would say integrity and perseverance. It takes a lot of door knocking to get through and find a deal here in this marketplace. And so integrity is important, is one of the most important items. And like Anton was saying, just we shoot people straight. We let them know. It's our time and their time. And so if the deal doesn't work, we make sure we let them know, or we try not to work on deals that aren't deliverable. And then the perseverance standpoint is just continue to work on deals until you find something that works.
Awesome, guys. Well, the best place for our Hot REI community to connect with Brian and Anton is going to be at CommonwealthREA.com. I'll be sure to include that, their website, in our show notes, as well as their LinkedIn profiles, and all that stuff will be included in the show notes. Hey, Brian and Anton, I really appreciate today. It was fun. I learned a lot, and looking forward to continuing our relationship and hopefully buying some multifamily in Phoenix here in the near future. And then to the audience, thank you for tuning in today, and commit to taking action today, maybe by calling these 2, and to move your investing forward. Take care, and God bless.
Thank you for listening to the Hot Real Estate Investing Podcast. Check out our website, hotrei.com, for additional content and resources. And please take a moment to subscribe and leave a review so we can continue to bring even more value to others through real estate investing.